Hello, everybody. This is Patrick MontesDeOca with Trading Talk. This segment is sponsored to you by the IRA Group, securing your investment in gold. We have the great pleasure and honor to have with us today Mr. John Embry, Chief Investment Strategist. John Embry joined Sprott Asset Management LP as a Chief Investment Strategist in March 2003 with more than $7 billion under management. He plays an instrumental role in developing the corporate and investment policy of the firm. John, an industry expert in precious metals, has studied the gold sector for over 30 years and has accumulated industry experience as a portfolio management specialist since 1963. Welcome to Trading Talk, John.
Always nice to chat with you, Patrick.
Let's get right into the interview here, and I would love to hear your comments on the new Fed's Chairwoman Janet Yellen monetary policies and tapering strategies moving forward from here.
Well, I think I've said before, I view Janet Yellen as Ben Bernanke light, and irrespective of what she says, she will do what she has to do. And I thought it was a very interesting comment she made a couple of days ago, and she said that due to the subpar job recovery, they were going to maintain interest rates at low levels for the foreseeable future, essentially. And the stock market responded very positively to that. Naturally, the gold market was knocked down. But the fact is that is wildly bullish for gold in the longer run, because the very simple fact, Patrick, is that they cannot remove the punch bowl to any great extent without sending interest rates much higher in the United States, and the impact on the economy would be extreme.
Will she create a world margin call globally as a consequence of this tapering process?
Well, I think the tapering process will probably be reversed before that becomes a reality. I think they're aware of the fact that these are globalized markets now, and to sort of bring down a number of global markets because they're sort of focused on tapering, I think is probably not going to happen. See, the problem that they have, Patrick, is that they basically got two conflicting issues. One, they're trying to support the U.S. economy. At the same time, they're trying to support the U.S. dollar, and I think those are mutually exclusive. And in the end, when push comes to shove, I suspect that the dollar will be the one that takes the hit.
John, please explain how the Fed can maintain a zero-base interest rate policy for what they say a couple of more years on the long end of the bond market, and isn't tapering another way of manipulating short-term interest rates higher?
Well, I think that's correct, and I guess I'm in the camp that doesn't believe that they can ultimately keep these long-term interest rates at the levels they're at, because the problem is that the U.S. dollar is severely over-owned throughout the world. And people are not being compensated for the risks that they're taking in holding the U.S. long bonds with what's going on in monetary policy. So I think this whole tapering discussion and the idea that they've been tapering for several months is at this point, just trying to, keep everything in status quo so they can go around saying that they're going to have low interest rates for the next few years. I don't think they can do it, but time will tell.
How can this policy help the stock market, the U.S. economy, when we have such a high debt interest payment obligation going on?
In the long run, it can't. This is, I said, I think right now their greatest fear is the dollar was going to break down, particularly at the time of the Russian Crimea crisis. And if you looked at a chart of the dollar, the trade-weighted dollar, it looked hideous. Mm-hmm. And so consequently, I think a lot of this right now is focused on the dollar, and they're trying to maintain the fiction that the U.S. economy is staging a relatively robust recovery. I do not see that in the numbers. So I think that the policy will change again as it becomes, the economy becomes a problem.
Right. Are the Feds using scare tactics again to stimulate possibly loan demand and increase the velocity of money into the economy, which has been lagging even under such record stimulus levels, from $800 billion to at the start of the 2008 Great Recession to the current to the currently an increasing Fed's $4 trillion balance sheet?
It's $4 trillion.
Results?
It's astounding, actually, what's transpired since the global financial crisis unfolded in terms of what's happened in the monetary base in the United States and the Fed balance sheet. And the fact is, I mean, if you want to be brutally honest about it, this has been directed primarily at trying to keep the banking system under control, interest rates low, and fund the massive federal deficits. The idea that there was going to have any significant impact on the economy, I think, was a misplaced idea. And I think that's proven to be the case. I mean, there's been a minor recovery, but given the degree of stimulus, I mean, if the economy wasn't sort of so clogged up with excessive debt, it would have gone berserk with all this money that's jammed into the system. But they can't get the monetary expansion into the banking system and into the public's hands because there aren't enough credit-worthy borrowers anymore, and those people that need money can't get it, and those people that don't need it don't want it. So it's kind of blocked up, and so I don't think it's going to work. And in my opinion, it hasn't worked other than it's kept the markets afloat, and you've got bubbles forming in a number of markets.
That seems to be, John, the general sentiment, even with Japan or even possibly China here creating potentially a massive crisis down the road.
Well, that's an excellent observation, Patrick. Like, I am a particular bear on Japan. I mean, I think that people should study Japan closely because I think that's coming to a number of the industrialized economies ultimately in the West. And Japan is in a hopeless situation. They have massive government debt. They have a huge bond market that's yielding next to nothing, and they are attempting to create inflation. Why would anyone in his right mind own a Japanese bond in that circumstance? So I think they're just headed for trouble, and their economy's not responding at all in reality, and basically they're getting a little more inflation. But as far as economic growth, virtually none. And their current account deficit has finally lapsed into a negative position after many, many years of being positive. So, no, I see Japan as a textbook case of what could envelop the entire Western world.
Can you bring us to speed, John, on what's going on with gold and the silver market?
Well, I mean, as you know, they got off to a pretty decent start at the beginning of the year. Gold rallied from, 1180 at the low at the last day of the year, and it got up to 1385.90. Right. And then literally the day Putin annexed Crimea, which I considered a negative event from the West's point of view, suddenly the gold market became under a tremendous pressure. For 12 consecutive days it was pounded, and they drove it down $100. And yet, if you can point out one fundamental reason for this, you're a better man than I am, because I can't see anything that would justify the gold price going down in the environment we've seen in that past 12 days.
Right.
So it's interference in a market. It's the flip side of trying to keep the dollar strong, and to me it's transitory, and it's setting up an even better buying opportunity in gold than at the beginning of the year.
Have we bottomed yet, or there is much more to the downside, do you think?
And you always have to be a little circumspect about calling bottoms when the market can be affected so much with derivatives and naked short selling and all sorts of things. But having said that, I think that if we haven't bottomed it, absolutely, we are extremely close. And what people should be focused on not is how much money they could lose in the next 2 weeks, but how much they can make in the next 2 years.
Right, exactly. John, let's shift gears for a minute. Your comments on the China economy. Anything we should be concerned over there?
Hello? Yeah, I'm here.
Yeah, your comments on the China economy. Anything we should be concerned over there?
Yeah, I think there's a lot of things to be concerned about. I'm a long-term bull in China, like most people, and I think that the 21st century, in retrospect, will be seen as a Chinese century, just as the 20th century was an American century. But having said that, I think that they're in the throes of going through a very difficult period. I mean, they've expanded dramatically on the basis of massive debt expansion and on the sort of the buying power in the rest of the world, and they became the manufacturing center for the rest of the world. Well, as you know, I mean, the Western world is the consumer's largely tapped out, And this is starting to back up into China. And when you start to have an economy that's grown as rapidly as they have with the debt creation, particularly in their shadow banking system, and the economy starts to slow, and it is most assuredly slowing, then the debt problems emerge. And that's what we're looking at now. You're starting to see defaults in the Chinese bond market and what have you. And the idea that these people are immune from the same problems that affect other economies, I think, is wrong. So I think the Chinese economy is under stress. I do not believe a lot of the economic numbers that they're coming out with. I think they're overstated. And I think it's a negative thing in the world because China's been the strongest entity in the world for the last few years. And if it weakens with what else is going on, that's not a positive.
Do you think that their record demand for physical gold will continue in 2014, or will it affect it?
No, I think even if they're going through reasonable economic difficulty, the longer-term policy is for them to accumulate physical gold. I've seen no appreciable slowdown to date, and at some point their demand is so strong, and with other countries and individuals looking for gold, I don't know where it's all going to come from. So I think that the physical side of the market will eventually drive the price, and it's still looking extremely positive.
You like silver or gold down here, John?
Well, in the very short term, gold looks a little better just because of the open interest situation on the COMEX, where there's a massive open interest on silver, which makes me uncomfortable. But having said that, I think silver is materially cheaper than gold in a longer-term sense, and that when the bull market reasserts itself with real enthusiasm, I think that the gold-silver ratio will decline precipitously, and I think that means that obviously no matter where gold's going, silver's going a lot higher on a relative basis. So if you really want to make a home run in the bullion field, I think you sort of be accumulating silver around $20. I think that's an absolute gift price.
Right. We just crossed that today, in fact. What about mining shares? Do they still have some potential for recovery here under the Yellonomics monetary policies?
Yeah, without question.
We head higher. Yeah.
No, I mean the fact is that nothing's changed in the mining share. They were looking pretty perky there up until about 2.5 weeks ago, and they're starting to break out. Right. Well, that wasn't going to be allowed. So I mean, there was just a violent attack on them. I mean, I had one company which I think is a pretty good producer. It dropped 31% in 5 days. Right. It's preposterous. It was already underpriced. So, I mean, this wasn't natural selling. This was sort of an attack by the powers that be. So what they've done, basically, on the premise that I'm right and physical gold and silver bullion are moving much higher in the next 2 years, these stocks are remarkably cheap, and you're getting a renewed opportunity to buy them at remarkable prices. And the only caveat I would put on it is you've got to be very selective because some of these companies have been damaged a lot. But so you do your homework, and I think you'll be shocked at how much money you'll make.
Any additional comments you'd like to make, John?
No, I just think that what has gone on. There's a surrealistic aspect to it all, and you've got to step back and look at the true fundamentals of the situation in the world economy, the geopolitical aspects, how cheap gold and silver are, and make the right decision. I mean, a lot of people are tied up in paper, and I think they could get badly hurt if this thing unfolds the way that I see it coming.
John, where can our audience contact you directly if they choose to do so?
Through just www.sprott.com. I mean, we've got an active website, and you can get a hold of me through there.
John Embry, it's always a pleasure to talk to you, sir, and until next time, my friend, you take care.
Patrick, this is my sentiments exactly. You too.
Thank you, sir. Take care.
You bet. See you later.